So is it going to be 23K or 16K for Bitcoin first? Which one gets tagged this week? I think this week is going to be a range-breaking week for trades, which means that it's a big week ahead. We have huge economic calendar events, and I thought let's start off with this tweet over here by Alpha BTC. He says this week is the market is going to be a range breaker with PPI and CPI numbers released Wednesday and Thursday. We find out if the Fed's hikes have made enough of an impact to start thinking of a softening landing. And then he says, my thinking is that they won't be, and markets or Bitcoin at least will have its next leg down. So as you can see, Wednesday, Thursday, all marked in red on the Forex calendar over here, the economic calendar. Big events coming up. Just don't mistaken this with the actual CPI raises in interest rates or anything. That's only coming in early November, but this will kind of give guidance on what the probability is of a 75 basis point rate hike, or 50 or 100 for that matter. So we'll get a lot more information regarding that, pure speculation as to what they will actually raise by later on in the year. So with that being said, CPI numbers will be released on October the 13th, and we've had 9 reports so far this year, and the S&P 500 has traded negative on 7 of the 9 days that the report came out. The last report sent the S&P 500 falling more than 4%, which is rare for inflation days. So last week we were expecting the expansion of that volatile move to start to take place, at least the etchings of that to be shown, but we continue to remain within a tight range, and all that means is the delay basically suggests that the next move is going to be even bigger than expected. So definitely a week to be focused. And I have noticed that a lot of people who usually were here a couple of weeks ago, a couple of months ago, have started to fall off. And this is typically what you expect to happen right before these major volatile moves. So definitely time to be focused. The one Hopium tweet that I do have from the trading tank over here is that major market bottoms have occurred in October more than any other month. So although September has been recorded historically as one of the worst months, the major bottoms or macro bottoms, you have comparing to all the other months, 9 of them happened in the month of October for all the biggest crashes recorded in history. So will this time be any different? We'll just have to wait and see. I mean, I definitely think that if you do have a dollar cost averaging portfolio, now is maybe the time to be a little bit more aggressive on that. And keyword a dollar cost averaging portfolio. I'm not telling you to go all in buying the dip or anything, because I'm definitely not. But if I am going to be allocating, for example, let's say you usually allocate about $100 a week or $1,000 a week, depending on kind of where you're at financially, maybe now's the time to start doubling that and going with $200 or $2,000 a week instead. Looking at this chart over here, this shows ultimately our range, which is the 2-week chart. You can see how tight that range has been, and I will continue to still wait for the ultimate capitulation into this level. This is officially 4 months that have closed outside of the lower band, and the next 2 weeks are now going to be focusing on is it going to lead into 4.5 months, which is the longest that we've had. And let's see what happens if we're going to hit this level or not. I would definitely, as a betting man, I think that it is going to be inevitable that we get to that zone eventually. Now, moving on to this chart over here, this was from last week. I did say that the thinking behind this particular trade, and you won't see any red over here because we did eliminate the risk completely on this trade. It is Bitcoin on the weekly chart stuck below all the important moving averages and exponential moving averages too. And you can see we are completely in profit on this trade. The Solana trade, which was our long, has been completely stopped out. And now when you look at this trade, I want you to ask yourself, is this bullish or bearish? And you'll find that there's actually a lot of people debating this weekly close. Can you consider this bullish or bearish? I mean, you can see a big wick that's been left behind. I tend to lean towards this is more bearish than bullish, simply for the matter of fact that, again, you're using this 255 as a resistance area, rejecting off of that zone. Plus, you have a downtrend over here, which is also being well respected from a technical analysis point of view. One thing I'm going to change on this chart is I'm just going to ever so slightly move the TP level up just in line with the Bollinger Band, and that is the trade idea that's coming in now at $16,000. So with that being said, have a look over here at this tweet from Pentoshi. He says that was this weekly candle bullish or bearish, and why? And you have a lot of different opinions in here, but one whom I definitely respect is Cheds, and he says bearish. That is a spinning top. It could be called high wave, long upper shadow, reflects a bounce and attempt to reverse momentum, which failed. The trend gained strength after the mean reversion. And then they get into like a little bit of a debate over here. But nevertheless, what I wanted to show you is this. If you were to Google that candlestick pattern, the inverted hammer, it's supposed to be a bullish reversal candlestick, but it really just acts as a bearish continuation 65% of the time. So basically, there's a 65% chance that will probably be bearish continuation to the downside. So be cognizant of that. Speaking of the consolidation within this range over here, you have Livercoin over here. He says Bitcoin hit levels of low volatility not seen in 2 years. While it's reasonable to expect a large move now more than ever, it's also important to note that there were 2 periods in the past when Bitcoin spent more than 40 days consolidating after hitting these levels. And let's click on this chart over here. You can see that happened all the way back in July of 2020, and that obviously led to a massive consolidation and then a big move to the upside. And the other time was in October, similar to where we're at now of 2019. And if I'm not mistaken, this looks like a big consolidation around that 6K level. And then we fell all the way down to $3,000. And I kind of feel that that is more of the picture that I'm seeing. I'll show you on the next chart now. But it looks very similar to that 2018 time period when you consolidated with low highs and a flat bottom. 18K is similar to back then what was $6,000, and then we fell through. So definitely, to me, still risk remains to the downside. Not to say that you shouldn't be bidding and taking longs on strong areas of horizontal support. I'm always an advocate of that. With this chart over here, I did mention that we would break this line down at some point, which we did. So we've broken down the support line, and then I told you guys, look, that's not a license. Just because you break down a diagonal is definitely not a license to go long. If anything, it's just a license to pay attention to a range that may be forming. And you have, this is kind of the primary range that we have. And until this level gets taken out over here, there isn't really much that's changed other than a slowdown in momentum. Ultimately, you now want to be watching for, is this chart, this is the inverted chart, just to catch you up to date if you're someone that's new here, meaning that if this goes up, it's actually bearish and the market means it's actually going down. So you'll be looking for this level to get taken out or this level to get taken out. And tying in with the first tweet over there, this week should be a range. It should break the range either to the up or the downside. We're going to be looking at that kind of volatility. So you want to be watching anywhere between this $18,000 level, 18,000. If we break that above this level, then obviously we're going much lower. And if you break below this level over here at 22,500, then you can say that, well, things are turning around and we're going bullish. But from a macroeconomic perspective, there really isn't much that's on the bull side, I must be honest with you, other than pure hopium and speculators that are hoping for something great to happen. So looking at the chart over here with the Bollinger Bands on the daily, we did outline the prior times that we had such tight consolidations, at least in the last year or so. And that happened in December, again in April, and then we had over here in June, we had in July, and then we have this current one, which is much, much tighter. I'm sure you can all agree that if you look at this, it's a lot tighter than those previous consolidating times. We are currently caught right in the middle Bollinger Band, and you can see that it is trying to hold that as resistance at about 19,300. Once that level gets lost, your lower Bollinger Band is at 18.5. But this all ties in with exactly what I've shown you over here, the overall range. The top of the Bollinger Band and the bottom of the Bollinger Band is essentially a range. Once we properly break through one or the other side, either the top or the bottom, we'll know the ultimate direction for this move. So keep your eye on that. And then this is a long tweet thread. I'm not going to read through it all now, but I really encourage you all to go and have a look at it. It essentially explains here, I'll just read the intro. He says the US dollar is wreaking havoc globally, and it's only just starting to pick up momentum. And he goes in detail. I'll give it a like, and then I'm going to retweet it. Go have a look on my Twitter. The link is in the description, or you can just look at the top there. That's at Kyledoops. Make sure you type it in exactly like that, so you don't go to one of the copycat scam ones. But go and have a read through this. It's absolutely brilliant, and it basically shows the reasons why the DXY or the dollar index is most likely just going to continue on to the upside over time. And I put this in last week's daily candle newsletter. Also sign up to that if you're not already. It is free. And I said, look, we have a primary zone over here at about 110 that seems to be acting as support. We use that as a springboard, bounced off, and now we are continuing to the upside. And if all this economic data comes out negative this week, I'd imagine that the DXY will continue to be the flight to safety that most people are treating it as. And therefore, you're going to be targeting about 114. And look, I'm not the biggest believer in double tops, double bottoms, triple tops, triple bottoms. I think that the more times that you hit at a certain area of resistance or support, the more likely it is to eventually crack and break through. And therefore, the next time that we come up here, I think we probably will break through as I've drawn these lines, come back down, retest up 114, and then we're going to continue on to the 6-month key level. Now, the reason that's important is because this ultimately suggests that the Fed probably won't be pivoting. At least this is what the DXY chart is telling us. And therefore, it's not over yet. Things are still maybe going to drag on a little bit longer. And I think that ultimately, I'm not a macroeconomist, but they're probably going to deem that we eventually are in inflation. So, in recession. So keep your eye on that. Very, very important over there. What about the stock market? How did that perform? And you can see, as I just mentioned right now, the double tops, double bottoms, triple bottoms. I don't really believe in it. Look how many times this level's been hit. Ultimately, we're going to fall through this area. What I was hoping would bounce up, hold this as support, is now flipped into resistance. So I could pretty much just change that to resistance over there. That is now going to be your next level of resistance. I personally was looking for this level to get tagged up here. Didn't happen. Next level of interest is the key quarterly zone. Whether that happens this week or over time, I'm not 100% sure, but this is the target. This is the ultimate target that I'm watching over there. Let's see what the VIX has done. Look at that. VIX has kicked up massively on today's open. So you can see it has opened. Look at that massive gap over there. You have a bit of a trend line that was forming, stuck above the moving average. And then the 30 mark is the risk line, meaning that anytime that you're above that line, anything above 30 is essentially a highly volatile space, and increasing VIX, which is the volatility indicator for the S&P 500, is usually a decreasing stock market. So, and which bleeds through into crypto. So watching this level, once you get above that 35 mark, it's probably going to expand very quickly, much higher into the 40 zone. So keep an eye on that. Let's see the S&P 500 futures. What this one's doing looks similar to the NASDAQ over there. Same thing. I am going to expect lower prices. Here's your ultimate low. Now there is a lot of liquidity over here. I told you that this was a no-brainer buy for many people, at least as a short-term bounce. So for those in traditional markets, and the reason why is because all the liquidity was going to be lying under this area over here. Not as many people probably bought that zone as what would have bought over here. The reason why is here they had confidence. They knew there was going to be liquidity under here. So as soon as you broke that, people would have started to bid. Also, if you turn that onto a weekly chart, it was directly in line with the 200-week moving average. So now we need to see if you cross even a tick below the prior week on the S&P 500 futures, then I would say that this is going to go down rapidly to the downside. And look at that massive wick that's been left behind. That is not necessarily a healthy looking candle. Put your charts on with, I'm going to actually do it now. I'm going to put an alarm or an alert underneath that previous week's wick low. There we go. So if that area gets taken out, I think it can move very quickly into the main target zone, which is not that far away anymore. It's only, let's see, from current levels, that's only about a 10% move, and it will be right in the zone over there. The yields, let's look at the 10-year yield. Very, very strong weekly close. Look at that massive candle to the upside over there. Let's put it on a daily chart. Still targeting ultimately anywhere between that 4.2 to 4.5% level on the 10-year yields, which makes it tough, right? That makes it tough for crypto and equities. It's a liquidity indicator suggesting that there is hardly any liquidity in the markets. Everybody is fleeing into government bonds over there. Okay, I wanted to show this as well because this should start to gain momentum very quickly if the fractal remains true, in line with what I showed you now, that some of the biggest crashes in history, the bottoms occurred in the month of October. And he says you can see the 2022 S&P 500 bear market cycle is following those of 1937, 2000, and 2008. And based on this, we are due for new lows into October the 25th, with a short-term bottom around then, give or take a couple of days. So this one's obviously calling for much, much worse in the long run, but it still ultimately suggests that October should have acceleration to the downside. And we do also have the quarterly earnings reports that are coming out from big companies, all sorts of companies, but like Apple, Microsoft, big tech companies, and these tend to move markets. I saw a tweet that showed that Apple alone, their market cap is bigger than all of the energy companies combined, which is just absolutely mind-boggling. So you can imagine if those earning reports are not good, what that can actually do to the markets. And here you have Callum Thomas. He says that record quantitative easing to quantitative tightening. You didn't think that you could escape unscathed from this monetary maelstrom, did you? And look at how much they've already removed from the balance sheet over there. And this typically is not really the environment that you can expect the whole market to reverse, especially crypto. Like, I mean, guys, we have to be real with ourselves. Like your altcoins and things, do you honestly think that with what's going on, that these are going to be the first most risky assets of all time in a quantitative tightening process to start to just enter into a bull run? It's so unlikely. Definitely safer playing the shorts than the longs. And I definitely think that, yeah, being an investor, it's you should probably take it easy. Focus on your career, focus on building as much wealth as you possibly can, saving as much money as you can to buy the ultimate bottom when it comes. I still stand by what I've said, that 10 to 12K I think is the ultimate zone to be watching. I will start buying around 16K, but 10 to 12K is when I start to get in aggressively. At least that's the area that makes the most sense as a bottom. And you have quantitative tightening like this enormous reduction of the balance sheet over there. You can't expect that things are just going to start to rally, especially not the riskiest assets in markets. So with that being said, I want to give a quick shout out to my sponsor for the day, which is PrimeXBT. Check them out over there. This is definitely more for high leverage margin trading. So for those of you who are probably scalp traders or you just like high leverage trading, they mostly use cross margin. You can get a sign up bonus if you use my promo code Kyledoops. Then you get access to up to $7,000 in sign up bonuses. And then also check out, they do have Forex pairs on there as well. So I think Forex is going to be volatile leading into this week as well. Okay, with that being said, let's move on to the 3-day chart, which is still in its parallel downtrend. And I mean, ask yourself very, very simply put, what was the best play every time that price came into these levels over there? So you had that, and ultimately you have that again. Same thing. What should you be doing? I mean, I think it's a rhetorical question over here. Probably not buying into resistance. I'm not necessarily telling you that you must go short, but probably buying into resistance is not the best idea. If you do get a spike to the upside right now, you're looking at reaching this trend line at about $20,500. So remember, each time I just keep moving that over. At first, we were watching this zone, which meant we could have got 21.5, and then those levels just go down and down and down and down because it's a downtrend. It's a downtrend. And therefore, you really have to ask yourself from an investor standpoint if there's any decent risk to reward in buying or bidding at these lows over here. I think as a trader, yes, that might make sense. But as an investor, I still don't think it makes sense. You want to see much more confidence of major areas being broken. And the MACD over here, it is starting to reach over here. It looks like it's going to start to roll over on the 3-day. The histogram is losing strength. And let's see if this starts to turn over, which ties in with what I'm seeing with the momentum oscillators on other time frames. Then you can expect, and I did mention this already last week, then you can expect a little bit further downside. And how far that goes is the question. But we'll cross that road when we get there. So looking at this chart, I think this is one of the most important charts and makes the most sense. It's BTC Daily RSI, and it's telling you everything that you need to know. So similar to the whole downtrend that I just showed you when you get to these levels, and then you have the RSI, which keeps creating these kind of bear flags that break down and down and down. And now we're kind of in the same level over there. So if you look at it on this chart, ultimately, I did show you there is also an upper resistance level, and RSI almost made it into that zone and started to turn back down. So that would be something that's bearish. But the most bearish thing of all is I did warn you guys last week. I said that, look, you'd want to see a couple of days holding above here, and then you're going to be looking for the next higher low, of which you can still look for the next higher low. But ultimately, risk remains to the downside when you're caught below all those important moving averages. And that is exactly what's happening. Look at how every single wick over the last 3 days has rejected from those moving averages. That is not what you want to see. Therefore, I would say that risk remains to the downside. So lower time frame, momentum oscillators on the 4-hour are starting to turn over. You're still caught within this tight triangle over here. Here's your 1, 2, 3 lows. Technically speaking, now I'm talking more to the traders, not the investors. Technically speaking, you could be bidding this region over here with your stop loss underneath the previous lows, coming in at about 18,600. But you have to ask yourself, what is the risk to reward? What is your upside potential? Because I think there's more resistance over here than there is support, meaning that the bears definitely have much more control in this situation. Price is stuck below both the 50 and the 200 EMA, and you have this massive cluster of resistance coming in between about $20,500 and $21,000. Ultimately, what I'm saying is that I think that bulls may have run out of time. They were meant to run this last week. They were meant to get their levels last week, and it seems like they have failed. So it's not looking good for them. Let's look at the different time frames over here using our momentum oscillators. I'm going to start off first high time frame on the weekly, and you can see weekly this still has a long way to go down, and it looks like the stochastic RSI, the orange is just breaking below the white. If this starts to roll over properly, then there could be a lot of downside momentum to come, and that's all happening right whilst you are at a very, what I would say is a weak area of support. Daily is still coming to the downside, and this can go down quite far, right? So this can go all the way down to pretty much a zero read, and currently it's sitting at about 34 to 40. So keep an eye out on that. The low time frames over here, 4-hour, you can see that the BBWP, which is the volatility indicator, is at extreme lows. And let's see on the daily, because this came back down and started contracting. It started expanding like that. And I told you guys last week, I said, watch for this, because what may happen is you may see this come up, come back down like that, and contract and print new blue bars like that, signaling that the volatility is extremely, extremely low. And then naturally that's going to expand eventually. It's a guarantee that it will expand. And now you need to see if that expansion starts to take place and the RSI is coming back down, which it is. It's coming back down. If it comes back into the purple zone over here, that would be incredibly bearish and mean that I would now move all bullish scenarios off the table and start to look back down towards much lower prices. So I think, guys, that brings us to the end. I think that summarizes everything this week. for most of you, I would say for most of you out there, retail traders, you have your day job and you're working on your other business endeavors. You're probably better off not trading the market this week. You're probably better off just waiting for the economic data to all come out, for the whole calendar to finish, and then have clearer direction of if we break towards the up or the downside, and then you can make your high probability trading decision based off of that information at a later stage. But anyways, I think this stream has been long enough. I appreciate each and every one of you. Thank you all for watching. Please make sure that you join most of the Crypto Banter community who have already signed up using ByBit or Bitget, because we do have the trading competition, which is coming up in, I think, probably from next week. I think it begins. But you can register this week. You only need $250 to trade. And I think that the best thing about the trading competition is not necessarily to try and win it, but you'll find that you learn a lot about yourself whilst doing the trading competition. You learn about your strengths and your weaknesses, and using only $250, I think that it's kind of like school fees money, in the sense that it's better to take that leap and to take the trades and learn about your mistakes. You grow a lot quicker than what you would by reading books or watching tons of YouTube videos, because you're actually in the action, right? So have a look at those. These are the links. I believe these are also the links to join. Let me just see. James, are you able to speak? James is at home. He cut his finger, guys. Are you able to speak, James? Is the link for the competition in here?
Yeah, that's it. It's right for your mouse. Okay. Under ByBit is the sign-up link, and then under Bitget the sign-up link. Once you've already
great.
got
So these are if you want to join the actual competition. If you don't have an exchange, then it would be these links that are below over here, and that gives you access to sign-up bonuses. So if you don't have an account, use one of these. If you do have an account with anyone from Crypto Banter, then this is where you would join the competition. And that is it, guys. Shoot your questions through on Discord. If you do have any questions, just tag me in the general chat or the trades group, and then I'll try and jump on there and answer some of your questions later today. And that's it. I will see you all on the next video. Cheers for now.